how long can this be irrational? It can last much longer than I could ever anticipate.
How can you have a bear market if nobody sells?
Our minds want to make all this thing rational, logical, and everything, but that's just not how markets work. They've basically legislated the way into this wall of money coming in to buy the dip.
These V-shaped recoveries means nobody learns any hard lessons. Everybody's okay. Everybody feels safe. And that's been a big part of it.
What does it take to shake Americans out of that sort of U.S.-centric perspective? Because the reality is, like you're using the words, Jason, like the market is not ripping higher. Germany is ripping higher.
I've been saying, I guess, privately for about the last year, what concerns me more is an oil spike.
Every one of us is also saying, I guess we should all stay long. None of us is saying, like, now's the time to short the Qs, right? None of us is doing that. So you have to separate the micro from the macro.
Those other finance podcasts, they're clickbait. This is clickbait, my friends. Ground rules: 1, before we start, the group of us agree on a pre-discussed topic. 2, while we're live, nobody Googles nothing. And 3, we each bring a surprise topic to the table. The mission is simple. If we as professionals have to talk about this crap all day, every day, shouldn't we also share how we talk to each other before, after, behind the scenes? Probably not. What do we have to lose? As the great philosophers in Operation Ivy once professed, and we proudly concur, all I know is that I don't know nothing. Let's click some beta. I'm Matt Zeigler, joined as always by the man who quotes Bible verses that he doesn't have context for, doesn't know where in the Bible they're located, but that's just like his theology, man. You rake my eye and turn that damn thing down, Dave Nadig. Welcome to Click Beta.
Wow. Coming in with the heat. I know my Bible verses a little bit.
I bet you do. But I really wanted to make a Cheech and Chong reference, so you're in California. That's what you get.
There we go. There we go.
And if alternate reality is in an alternate reality, he's a seedy actor named Jason the Mac Daddy Warbuck, where he plays a taco delivery man to a sultry cast of neighborly neighbors in the infamous adult film classic Operation Midnight Hammer. Yes,
You went off reservation today. Yeah.
That's a good
Fun one.
Well, my energy was too low last time. I had to dial it up for you this afternoon here. Well,
Yes.
we're talking, our topic du jour is, of course, war. What is it good for? What is it not good for? And if I only prepped for this by playing war songs on my walk this morning, that's why we can be friends. Dave Nadig, we're starting with you. What are you thinking?
We just have to say this out loud. We came to the brink of World War III, dropping bombs in Iran. I mean, not that dropping bombs in Iran is like particularly new. Like every administration decides they want to bomb something. It's happened in every presidency of my lifetime. And the market's up 2.5%. So, I mean, just at some point, like I certainly didn't sell anything. And because I have this generalized theory that everything at this point is rigged and I never want to bet against the house. But even I was like, okay, well, at least we're going to get $85 oil and a 5% drop in the S&P. Nope. Turns out what we're going for is fall 15. I got nothing. Do we live in a world where the headlines simply don't matter at all anymore?
Say the name of your piece, because you wrote about this. This is why I wanted to ask you this first. You were talking about this week. Yeah, weren't you writing about this week?
No.
No?
I mean, I didn't write a piece about this.
Okay, then I just saw you tweeting about this, right?
I was just tweeting. Like I was doing the last gasp of people who can't put together a whole 1,500 word, which is you just write 20.
I mean, Jason, what about you? You feel like you just got punched in the face and you're just seeing stars going, all right.
More time. That's what. No, it's just it's brevity. You know, it's
yeah, exactly.
So
it's brevity, man.
What this reminded me of, I was actually just on a call with my team right before this, and I just wanted to demark this one too. It's like all the time, like Dave saying, like over the weekend, you know, we're waiting patiently for the Sunday futures open, you know, on Sunday night, and like, okay, we're gonna have VIX up, we're gonna have oil up, you know, S&P down. No, the exact opposite. You know, like oil's down, what, like another 10%, like over the last few days. I mean, it had to run up. Well, I will say in fairness, it did have maybe, you know, collective hive mind before it was running up, like oil was running up like 20% in the last month. So then it dropped another 10%. So now it's like up 7-8-ish for the month, but still down on the year. But like, Dave, I was totally in your camp. And then what I do want to point out though, and this is why I pointed out to my team, is also like, yeah, you know, potential World War III, checks VIX, you know, balls crushed back down, you know, nothing to see here. The same thing happened. January 6th happens. Checks VIX markets. Vol is down. Like none of this stuff makes sense. And that's why I bring it up is like the paradox that we live through when we're dealing with markets and in our businesses is it doesn't matter, what textbooks or what MBA program you've got. Our minds want to make all this thing rational, logical and everything, but that's just not how markets work. And it's almost to your point, Dave, is like, it reminds me of, I hesitate to even say the Livermore book because I just can't stand when people always quote that. But it's like, what is the actual trend of the market, right? And then that shows you whether things actually, like you're saying, like, is it still buy the fucking dip? It obviously is that. And I think now we're combining it with the taco trade, right? And I actually, like, the taco trade made me nervous when that, Trump always chickens out, like just how knowing what a deep cut that was for him. I'm like, now he's going to do some stuff like bomb Iran to like make up for taco trade. Like, what are we doing? What are we doing here?
Yeah, you don't put the label on the label maker. Like that's a really. I felt the same way. I saw that. I was like, guys,
it's like dating him. Yeah.
Yeah, you have violated the ultimate playground rule of how this system works by putting a label on the label maker. This always ends badly. You clearly didn't go to the right middle school.
Well, but is it as simple as the fact that there's nobody left to sell? We've conditioned retail to always buy the dip and that there is no alternative, right? I mean, this feels like a giant combination of buy every dip and there is no alternative. Like between those two, I feel like that's got to be the prevailing market wisdom. And we've also seen, same time, like international markets are beating the S&P 500 by 14% this year. Nobody cares. No flows whatsoever. Literally could not care less. And yet the U.S. investor is just sort of grinding along, bidding up the S&P another 1% on the back of global calamity. So is this market capable of having a sustained downturn?
I mean, Matt, I'll jump in. Like, what
would it take?
Like, my overarching framework is, I guess, much more Hyman Minsky in a very simplistic sense, right? Like stability breeds instability, right, Dave? And like, as long as buy the dip works, it keeps working, and then you have nobody looking to short the market and everything, and that's when we have the explosive moves at the downside. That's when you break through those 2+ standard deviation moves. And until everybody's convinced of otherwise, that's when those things happen. And so like, but how long can this be irrational? It can last much longer than I could ever anticipate. And so that's part of it. And then, as you know, just that wall of just IRA and 401k money, coming in, as workers are in target date funds and everything we mandated, I don't want to, Mike Green can obviously say it much more eloquently than we can, how they've basically legislated the way into this wall of money coming in to buy the dip. And then we'll see what happens with retirees on the countervailing force of that. But you're not seeing anybody reaching for any hedges or anything, especially even over the weekend. We didn't really even see that either. So, I mean, Matt, what do you think is does anything break this down? I mean, or anything in the near future?
I'm with you, and I'm Hyman Minsky plus
that's
Wild
the way
Coyote. I'm literally of the camp that first you run off the cliff.
That's exactly the way I picture it in my head is Wile E. Coyote.
Yeah.
Just hovering over the edge of the cliff with your feet still turning.
Step one, you idiotically run off the cliff. Step two, you just keep running because nothing happens.
You just wait for the Minsky moment when you realize there's nothing underneath.
And this is the thing. Like, you have to keep running, realize you're running over air, look down, look back up, like look down 2 or 3 times, pull out your random little sign that indicates like self-awareness has finally sunk in. And then and only then, and if there's not an Acme box falling from the sky to save you, like you actually have your moment. And it really feels like this last weekend is just an indication how far out over the cliff we must be right now. And it doesn't mean we can't still go because nobody seems aware of it. Doesn't seem
right. But again, how can you have a bear market if nobody sells? Like if nobody wants to actually be the one puking, how do you ever get a sustained bear market?
So then don't you need somebody to be forced to puke, which means you almost need to come from a place that's not S&P 500 mega.
Right. You need some sort of structural break.
You need a structural break, a global financial crisis style break where like the real estate market pukes and a bunch of banks dissolve. And then that spills over into the rest of the stuff where people need liquidity. But it's like you're not going to break retail unless you have a massive recession and massive job loss. I mean, how do you think about these,
or like
I guess, exogenous shocks?
Like, as we know, Corey said it best too, like liquidity
sound fancy.
cascades, right? It's got to come from some of that exogenous shock, and that carries through because, like you're saying,
There you
who
go.
else is going to sell? But then almost going back to your Wile E. Coyote, that also creates an air pocket, though, from retail. That when that does cascade through, there's that air pocket there where, like, yes, nobody's
Yes.
selling, but nobody's buying. And then it collapses down, and then we start seeing, circuit breakers and everything put in place because we're just free falling. And so, that's potential. But also it's like, I think it's so hard. It's like whenever we say any of this stuff, it just sounds like we're such like perma bears or something. And I'm not saying that at all. It's just like,
Well, but this is the irony is that I think all three of us are kind of basically fully invested kind of people. I don't think any of us are taking giant put positions because we think it's all going down tomorrow. But I think, all have a fairly negative view on the current setup, to use that old Wall Street speak. But again, I can't imagine betting against the house on this. I can't imagine having so much intel that I'm like, this is the thing that causes the 15% drop. I just can't see it. And I do wonder whether we are, in fact, in a different kind of market post-pandemic. I mean, we've had these rises of retail money flow into markets before. We had this in 99, certainly. But this time it feels different. It really does feel like this money is just very sticky. And the only place it seems to move is occasionally back and forth across the crypto line with retail. But even then, it seems like what happened over the last 4 days was people sold crypto to buy the US.
And I think that's the gambling part of it too, right? It's right now we are a very pro-investing, pro-gambling, pro-financialization of whatever, and extra emphasis on Ben Hunt stuff with the stocks are just a political utility at this point. So you got the policymaker panic button on everything to go like, oh, we got this, we got this, we got this. But I'm with you. Like, where can this change at the margin? We're not doomers, but we're just saying like it shouldn't be this easy. It shouldn't be this comfortable.
You're talking to actual clients. What do your actual clients think? They just don't care?
I think, and this is the same thing with COVID, the shorter the drop and the quicker the recovery, the more people go like, oh, good, I stayed invested, and it reinforces the behavior. We haven't had an extended downturn. So that, number one, is a huge thing. These V-shaped recoveries means nobody learns any hard lessons. Everybody's okay. Everybody feels safe. And that's been a big part of it. Just don't overreact to this stuff because that's the market we're in right now. And that's
right.
That's
people who sold on April 9th, idiots.
Yeah.
Right.
Now, the part that I worry about, but also this is something I wonder about, but I don't know. But I wonder about this a lot. Every time I start to watch the assumptions people will make, like that they'll casually throw out of what they can expect from either a portfolio, from stocks, or something else. When those things start to creep up, I always go like, okay, if you think stocks are going to give you, rewind the clock however many years. Somebody would be like, maybe I could get 5% out of this portfolio with rates at 0 or whatever. And you're like, okay, that means somewhere between 15% and, 25% down. If I'm taking 3 to 5 years of your expectations away, that's the part where you're going to go like, oh my God, what if I was totally wrong and I'm going to want to sell a bunch of stuff?
Right.
And I wonder too, if like in the last few years, people having such lofty expectations of what they can get from their equity portfolios, that it's like, do we actually need a 30, 40, 50% decline in a really short order way where people would wake up? Because that 20%
we had
decline,
2022. Like 2022 was only 3 years ago, and we did go down 20%, right? So we've had that experience, but again, it doesn't seem like that many people really panicked. It just seemed like people sort of rode it out.
You're saying 30, 40% down. Like even Mart Spitznagel from Universa, and related to Taleb fame, is like thinks he sees an 80% drop at one point. Of course, like he's talking his own book, but like just to get like because of the irrational exuberance of the last few years. But to your point, Dave, there's like in 2022, I felt like people weren't panicky, and I wonder if like they were like, well, I wonder if they justified it as like this is a mean reversion from what I got post COVID and everything, and they felt like still pretty good about where they were at, and then Matt, you were starting to say, and Dave, you brought up April as well. Is like, you saw Q1 and then going to April, like when people were down, maybe up to 10% in S&P, I felt like this was the first time I saw some real panic on people's faces. But then it reverted so quickly again by the end of April. It was like, did that once again reinforce this buying of the dip, almost like this Minsky, once again, effect of like, no, I'm good. I'll just stay invested, or I add to it and I'll be just fine. But it was interesting. I did feel like 2022, and this is always subjective and anecdotal, but to your point, Dave, 2022, I didn't see people panicking. I felt like the Liberation Day stuff, you started to see some panic again. But maybe people are just unaccustomed to like a short drawdown like that.
Let's get back to let's get back to the fun topic of war, right? So we just had more scuffle in the Middle East, bombs going around both directions, and certainly don't want to get into any of the politics of it. It strikes me that the risk of some sort of U.S. involvement that is unintentional, whether that's a terrorist attack or whatever, planes or, something on American soil, that risk probably went up when we had the largest military operation in the last 25 years over the weekend against a state sponsor of terrorism. Do you think that some sort of activity, and I don't want to, again, I hate sounding doomer about this, but like if we have the equivalent of a 9/11 or some sort of horrific event here on American soil, do you think that even that would make a difference, or would that in fact catalyze a America first, sort of Pearl Harbor like moment, which indeed happened after 9/11 for a number of years, right? Do you think that we're in a world where that sends the market down, or does that also send the market up because everybody wants to reshore their investments?
I think a big part of this is markets as a political utility. Then you have to look at the policymakers in the face of that event. And this is something where like the Sam Harrises of the world have been saying this for some time, where it's like, whatever the hell they do, and this is no statement on Trump, Powell, or any of these people. It's if you invent an event, if something happens where the policy response falls on its face, and probably more than once, where we have the Wile E. Coyote moment, it ends badly. But if the policy response, because markets are political utility, is like sharp, fast, and effective in communicating what it is, back to the 2022 scenario, like, yeah, there was a kind of a crazy policy response where we almost fell on our face with rates and all the other stuff that was going on. But unemployment never spiked. A whole bunch of other stuff didn't happen at the same time. And they were able to solve for that misstep, and markets got right back to their ways by some.
And inflation came off very quickly off the peaks, and yeah.
All those compounding events weren't there, so the policymakers, even with a quote unquote misstep, were able to get back in line. I think the risk all turns around to: do we have a policymaker misstep in the face of some exogenous shock that they actually handle really poorly, and cast all political bias aside, because you'll be shocked in both directions on this stuff, how people react. But I think that'll be the ultimate test.
Yeah, I think I agree with that. The policy response is probably more important than the event itself.
And the valuations and the whole mess of it.
I started hitting at it before, but I've been saying, I guess, privately for about the last year, what concerns me more is an oil spike. Because we're all old enough to remember what happened in 2008 when we saw oil at 150 and what that does to economies and recessions. And so like the equivalent roughly today would be oil at $250 to $300 a barrel, right? And I don't think that's what people are prepared for. I think like having these dips or recoveries, liquidity cascades in the stock market, as we know, most Americans, wealth is held in their home anyway. But I think that sort of recessionary input that we get from energy prices and oil and those inputs, that scares me more than anything else. And I think that's the one thing people are really ill-equipped and ill-prepared for, where I think we can handle, kind of drawdowns in the stock bucket, so to speak. But it hurts for retirement. But
What would it take for that to happen?
That's the thing. We're always like, you guys have read all of it too. We're always teetering on just the right amount of barrels every single day for consumption, right? So you would think, like you said, bombing Iran, right, should have spiked oil if we read our textbooks, right? But we live in a world of paradox. So I don't know. Like it's almost like that gray swan versus black swan. I don't know, but that's my bigger fear: is a real spike in those energy inputs and the type of crunch that puts on economies and people. We haven't really felt for a good 15 years, and maybe we didn't even really feel it in 2008 as much because of everything else was going on. People kind of forget about that too. And we haven't really, I guess, seen it since like the 70s or intermittently since then.
Yeah. I always worry about the layer of that, or the meta layer of that, is like what the actual trade war risks are. Like we actually ceased trade with trading partners and we saw a by design COVID type supply chain collapse, and just how long it would take to recover from something like that. Because those are the types of shocks where if it hits the household expenses, and now it's not just, can I fix up this part of my house, or I think about moving or whatever, driving to work or whatever it may be, when it flows all the way through the household budgets in a fast and extreme and lasting way, I'm right back to it. I think that's another thing where it would demand a very loud and active policy response that if you screw up both of those things together, that's a disaster scenario.
And so I agree. So this is really helpful, and I want to continue this line of thinking, right? Energy inputs, I think I totally agree. That's something that starts to become too broad, hit everybody too deeply. My concern about the policy response is it seems like this administration's first reaction would be some form of price controls, because that seems to be their, pull out the first gun they got in the, in the holster. And it's like, well, just tell people that they can't raise prices. We've already seen, we've seen tweets like that, or posts, or whatever we call the damn things now. But we haven't seen a lot of action on those, right? We haven't seen like a national gas cap or anything like that. Do you think that this administration is in a position to respond to a major energy inputs spike? Because he certainly jawbones, he's trying to jawbone oil lower every single day. But we all know the reality of the current U.S. production environment. I mean, sure, if we had sustained oil at 150, all sorts of stuff becomes viable. But you also don't turn on supply in a day, right? That's why people look at the rig count. So what are your thoughts there? Do you think that a shock like that is what it takes to really shake the tree, or do you think that we're capable of responding to that quickly?
I think about more like physical goods and commodities and energy inputs. Maybe like I'm just getting too old. But like, to me, it's not just this administration. I don't think any administration can handle that. Like, right, we're always talking about like our minds jump to these things like 60-40 or now 80-20 or target date funds and SPY, S&P 500 ETFs. And it's like, those are these abstract derivatives that people don't really care about. When we talk about energy inputs, these are things that actually matter to us, and being able to eat, being able to move around freely, like all of those things like people take for granted. We haven't thought about in probably decades. Those are the things that scare me more. And I don't think it's, like you're saying, like we're walking on that tightrope all the time on barrels produced versus barrels consumed, or other energy inputs as well, whether it's nat gas or, anything else. Is like that is such a tenuous situation that I'm not sure any administration can react to it appropriately, whether it's this one, the next one, or a previous one. Primarily because, too, like you said, you just can't pull these things online immediately. It just doesn't work like that. And so like these things are kind of entrenched the way they are. And as soon as you have some sort of shock that really throws that out of kilter, we've been really lucky to haven't seen that. And I think about almost the analogy to me would be like as Matt was bringing up, it's like supply chain, like, or just in time inventory and manufacturing. Like, we have all had unbelievable wealth because of that, right? And then we saw when that gets disrupted by COVID, what that actually does to our daily lives. But at the same time, it's like, do we revert back? Like some people think, I don't know, like it seemed to work pretty good. Like, yeah, you have these intermittent things. And I don't know if like you guys saw, maybe it's because I don't watch the news enough. It's like, I don't know if you guys saw that the like Whole Foods, like their shelves were empty for the last few weeks. And I didn't really see anybody talking about it because once it was just apparently a hack to their inventory system.
Yeah, I mean, I'm in California right now, and we went to Whole Foods, and we were shocked to see that like whole sections were just empty. And so it is clear that we have supply lane issues. I think we figured that out. I think the bigger question is whether or not we've already used all the guns in the arsenal to try to wrestle with those things. Like what is sort of left? I mean, we drained a lot of this SPR. I don't think we've refilled that completely. Those kinds of things. I feel like we've used a lot of those tools. I suppose one good sign is that we have interest rates at a sort of median level, which means they could go both directions without being ahistorical. We could both cut or raise if we needed to for some reason. Interesting. But boy, it doesn't feel great, does it?
No, it feels terribly unsettling. And a question for both of you, and Jason, maybe on the portfolio front, just how you even think about this too. This year so far, this whole like bounce of volatility, this V-shaped recovery, the almost undying need that I feel like I have to just be like, you just got to stay the course right now. You got to focus on what you can control and batten down the hedges on expenses, lifestyle, whatever else that you need to be extra aware of. But it feels like we're all just waiting for something awful to come up and surprise us, and we just have to capture enough upside in the meantime. You think about this stuff a lot.
Yeah, I think like Dave was saying, it's still buy the dip mentality, and it's still apparently a bear market and diversification, right? Like it's just
bear market and diversification. That's what it is. Yes,
that's a hat tip to Meb Faber. I think I would say Meb coined that term. Yeah. But like that's the difficulty, right? Like you can argue against it all you want and have diversification and have commodity inputs, volatility, tail risk, all of that stuff. But as long as the market just keeps cranking higher, you look like an idiot with egg on your face. So that's why it was interesting, in our group chat about like having kind of like what's the portfolio setup for potential, World War III, et cetera. And as we saw, as we're joking about the response of like oil down, VIX down, is like, who knows what the actual portfolio construct is, right? Like, are we like Dave's saying, do we just keep marching along with this S&P up and this just wall of buy the dip? I don't know. And like, that's why it's difficult to provide any sort of value or advice when the stock market rips higher. Like all I keep thinking about actually is like just the really old kind of trite quote of like, in a bull market, you want a 20-year-old, in a bear market, you want a 60-year-old, right? And we just haven't seen that bear market. We're all pontificating what that bear market could look like. But until it comes, people apparently aren't going to care.
Aren't we though, the U.S. in a stealth bear market? I mean, I don't know. I put up this chart every day when I go through my charts in the morning of like the top 15 traded countries and the top 15 traded country buckets. So EFA, EEM, the top 5 emerging markets, the top 5 developed markets, that panel. SPY's on the bottom of it for the last year, for the last 6 months. Like, it is the worst performing heavily traded equity market in the world since the election by far. So yeah, we're not in a bear market in the sense that SPY's down 20%, but on a relative basis to the opportunity set for equity investors, the US is stinking up the joint in a way it hasn't since like the mid 2010s. So like, what does it take to shake Americans out of that sort of US centric perspective? Because the reality is, like you're using the words, Jason, like the market is not ripping higher. Germany is ripping higher, like other countries are ripping higher. What we're doing is having a pretty boring year with some high volatility in the middle of it. So like,
that's fair.
There's that disconnect in mentality that I think is interesting.
But like to your point though, that's, for us we have broad diversification globally, right? We've had to eat shit for the last 5 years. So it's not really, I'm not counting the
same,
yet. I think
same. You're not alone.
Right.
You're not alone.
Yeah,
right.
Yeah. So everybody that's in international is also like a little tentative, like nobody's cheering for it. And maybe people aren't talking about it.
Please
right?
don't run the
Because,
3-year chart. Yeah.
Yeah. They don't want egg on their face again. But like you're saying, I don't know. I think about it always in the institutional sense too. It's like, these are large cargo ships, right? That take a lot of time to like turn. And so maybe it's going to take maybe years of outperformance, and then people performance chase, and people mistime the markets all the time. So maybe that's part of it too.
Or some of it, funny enough, I've literally been thinking about this and trying to think what's the metaphor for my version of that same panel in my life, Dave. So you're hitting me in a deep part of my soul right now, because this has been my thought. And I keep going back to, it almost feels like, I don't know, you got the beachfront property off the coast of, you got the Montauk house. And so like the capital, the market cap of my neighborhood is already really, really high. So if I've only gone up 5% this year, and the guy in California that I know, or the buddy in Miami has gone up 20%, I'm like, that's cute. The market cap of my neighborhood can buy 16 of yours. Like, that's cute that yours went up. So mine didn't go up as fast this time. Look at what I've done over the last. And I almost wonder if, to Jason's slow moving cargo ship analogy, that's a big part of this, where it's, I own the biggest house in the neighborhood, in the most successful neighborhood. Am I really going to care that somebody developed these opportunity zones? And Germany did okay for a minute. That's almost the way it feels.
Well, but it's kind of like
excellent.
Yeah, it feels a little bit like we're. I say all the time, don't bet against the house as my foundational, investment thesis for the now. But at the same time, the house, i.e. the U.S. and the political infrastructure behind it, increasingly seems like the bully, right, on the international stage, on the domestic stage. So the question is there ever a point where the bully gets a comeuppance here? I suspect actually not is the answer. I mean, there may be, elections and things like that, but is there an anti-American trade here? I just don't actually see one.
The part that I'm most excited for is Jason's about to answer this, and I'm trying to bet in my mind, is this the life is not fair and the Stoics are bastards? Or is this going to be debt jubilee? I don't know which way it's about to go.
I'm on debt jubilee.
I can't wait. Jason,
I was actually thinking more like we just sound like just these old timers, like eat your vegetables, kids. Like you're going to get your comeuppance in one day, and then like.
But we're all stay long.
I know, like we are, but like there's also like it reminded me of actually Matt. What I was thinking about was like when Dave was saying that, like how value investors are basically like when you start talking about comeuppance. I feel like value investors are like that's all they're waiting for is this comeuppance for the rest of the market, right? And it's a weird way to live your life. It's like one day you'll see. Like,
But they're kind of like Latter-day Saints. I mean, this is sort of like the perpetual pining for the revelation.
Exactly.
You know?
Millionaireanism is like the true religion of the masses, right? Like end times are nigh, right?
Right.
Could not have, all right. So I'm propelling us forward because I think this is the segue into my topic, which
Okay.
I feel like I have to put the black bar over my eyes for this one or something before I say this out loud. But I keep thinking of this month, and it's just all the behavioral finance stuff, like all these things. Like, does any of it ever actually matter? Does it matter that we label these heuristics and biases and other things? Does it just go to therapy, get enough self-aware, and then like try to be an okay human in the world? But it almost feels like just take all those textbooks, take all that study material, and throw most of them in the trash can.
Well, I feel like what you're saying is what I was thinking about too is like the echo chamber we're in, right? Like you're saying, I don't think most people care about the things we care about, right? Or talk about these things or whatever. Like you're saying, I think your average person out there like it has no idea that like ex-US is outperforming this year in the stock market. They just don't care. Like you're saying, they're trying to enjoy their tri-tune on the weekends or whatever it is these days. And so. And the behavioral stuff I always find fascinating is like Danny Kahneman said, he falls for every behavioral bias there is, even though he studied it his whole life. So like, how helpful is it to know all of these cognitive biases other than being delusional and think that you're somehow, overwrought them where you're falling for them on a daily basis. So I don't know, like, sorry, Dave, I kind of cut you off and I jumped in there, but.
No, I like your answer better. I was simply going to say, I think that it's never been more valuable to study human psychology, behavioral economics, behavioral finance, whichever version of the academic discipline we want to call it, because things really don't make sense. Like when the markets make the least amount of empirical mathematical sense is when you need the most humanity in your understanding of markets. Because if what is going on cannot be explained by changes in forward earnings expectations, blah, blah, supply and demand in the commodities markets, blah, 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 and instead, you're seeing what seems like irrational price behavior, irrational trading behavior. Well, guess what? That means that it's all the human part that we're looking at. And so it's never been more important to wade in there. I mean, we had this whole conversation here about, well, how much of what we're witnessing is this conditioned by the dip mentality? How much of this is this sort of unawareness and lack of a status game because nobody cares what's going on in Germany? Those are behavioral economics concerns, right? Those that's the language of psychology. So I think it's never been more important. I had interestingly enough, I had a niece who's heading off to college, ask what they want to study, behavioral economics. It's become very much a hot topic for folks who aren't interested in finance because it does seem like the last great frontier.
I think, and obviously I said this a little bit tongue-in-cheek as a question, but I'm really thinking about it because I'm thinking about the end of Thinking Fast and Slow, which is still my favorite part of that book, where he says what you just said, Jason. He's like, at the water cooler, you might be a little bit less of a douche if you just accept that I know all this stuff and I'm still this deeply flawed. I feel like, and this is the beginning of our conversation today too, is it's just understanding what lenses other people have up for how they're seeing the world. Like maybe that's the most useful thing is on sort of like a micro level, just understanding how to help each other versus at a macro level. I think that's also the root of why I wanted to ask this question of both of you guys. Like, is there a difference between how you think about this stuff, micro versus macro?
Yeah, in a sense, like I get what you're saying, and like I always think about it as like allostatic bands, not like homostasis or homeostasis. It's more like allostasis, like
moving between.
Yeah, we move in way beyond where we're going to be before, and then they snap back. Like a lot of times, like you see like wealth inequality, and you just see it moving away for decades, and then it just takes one market crash, right, to bring that back in line. Like it's just these things can happen relatively quickly, and almost like you're saying, Matt, is like if that crash happens, then yes, maybe we rebuild communities, and humans are adaptable. We're really good at going back to that, and that's at least what I find fascinating. But also related to what Dave was saying is like, I'm not a market timer. I've never necessarily understood the world around me, but I was saying anecdotally the other day that I think that this time right now I'm having eerie reminiscences of like 2007, where I'm looking around and I'm just like, where is all this money coming from? Like, how are people making this much more? What is everybody doing? Like, I don't know, like anecdotally, if you go to like a farmer's market or a baseball game in the middle of the day, it's full. And it's just like, what are all these people doing? And like, everybody's happy, everybody's spending, like consumer. I just like, it just reminded me of 2007. I'm not saying we're going to hit that type of crash, but it was just interesting anecdote for myself personally. It's like, that's what I felt like. It's just like, it just feels like the world's awash of money and I can't figure it out. Not that I could ever figure it out, but.
Yeah, I think I agree that sort of local observation versus what you do with your global portfolio, I think it's really important to separate those two because, good Lord, I mean, almost everybody you talk to sort of views the world through their narrow little tunnel, and then they also invest through that narrow little tunnel. And that's how you end up with people who have been short the market their entire lives, or people who think that Tesla is going to go to $1 billion no matter what, because they're not actually thinking rationally, they're thinking personally and hopefully. And we've had this whole conversation, which has sounded very, very doomery for anybody who was not listening very carefully. But every one of us is also saying, I guess we should all stay long. None of us is saying like, now's the time to short the Qs, right? None of us is doing that. So you have to separate the micro from the macro. And it can be true that all the logical signs point to fully invested, risk on, while at the same time, your personal biases may say that the world is falling apart around you. Those things can both be true at the same time. And that takes a lot of time to like get comfortable with. It's living in discomfort.
Like timing. Yeah, that's why timing is the most difficult. And I'm sure you guys have seen it too, but especially running, a tail risk strategy is like, everybody wants tail risk after the fact. They don't want it before, right? And it's weird. They come to you and almost like, hey, do you have a time machine where I can just go back to prior and buy some tail risk? And it's just like, that's not how it works, but they all want tail risk after the fact. So it's like, these are that's what I'm saying, Matt, you were talking about the behavioral biases, but also I was thinking about it. I had a similar kind of question to Matt's, but it's more towards Dave. And I'm sure Matt, you have thoughts on it too, is like, if an event takes place, right? What stops this market? What's the Minsky turn? We don't know it. Let's say we don't know what it is, but it happens. And these things are large cargo ships. All this stuff takes time. What I am thinking about, though, when taking Matt back to community, and Dave, you started writing about this because others started talking about it, is like, now the Gen X needs to be the elder in this situation. So I'm just curious, like, and maybe it takes a full on, market crash, liquidity cascades, society upheaval for Gen X to step into those elders of society. But I'm curious about, since you've written about it and are now been probably thinking about it more, and you had no answers at first, have you started to come up with ideas of what it looks like to be an elder in Gen X, even though none of us want that, none of us want that moniker?
The most encouraging response to me writing that and the nice interview we did with Neil Howe, which got a lot of traction.
Yeah.
The most encouraging part has been the number of mostly younger Gen Xers who've reached out to talk about the individual things they're doing to respond. And they tend to be much more local than I tend to think. There's a great podcast drop today with friends of the show, Blair Duquesne from Ritholtz Wealth Management on Fraser Rice's Wealth Actually podcast. It's just a 20-minute hit about her working with the city of New Orleans to get rational human beings on the levy committees, which sounds like the most boring, dumb local politics thing ever, except when the levees fail, New Orleans goes underwater. So it really matters.
Extra emphasis on the Minsky moment that was Katrina in that scenario. All the community involvement after. Yeah, you got to amazing episode.
The local catastrophe is the Minsky moment. And I think that it is less likely to me that we have some sort of national galvanizing Minsky moment where everybody has Blair's reaction, which was sort of, screw this, I'm going to figure out how come we don't have any engineers on the levy committee, really dumb crap like that. It's going to take some stuff breaking that feels very local. I actually suspect it's going to be rural hospitals is going to be the thing that's going to collapse, because I think we're going to get a bunch of these hardcore healthcare cuts. They are going to get passed through. They're going to pretend that they're protecting local hospitals. And what's actually going to happen is an enormous number of hospitals, particularly in the south of the United States, are just going to close. They're just going to go bankrupt. And we're going to end up with these big healthcare deserts. That's going to cause local reactions, because all of a sudden some local politician is going to lose a family member because there's no trauma center and somebody gets their hand caught in a tractor, right? So those things, I think, really will be polarizing. I hope we don't have to end up with that kind of human suffering to get there. But I think it's going to be more local. And the stories that I've heard from, folks who are in their late 40s to early 60s since I posted those things have all been in that kind of narrow zone. Like, yeah, we got together and we fixed up this neighborhood in San Francisco that we all really cared about. Or, we went and we, bought this beachfront property that nobody wanted and donated it to a land trust. Like really narrow stuff like that. I suspect that's actually how it gets rebuilt.
Do you think that's part of the silver lining of this market is like, right? Like people are seemingly, like I'm saying, where does all this money come from? Like seemingly a lot of people are, it feels like post-economic. Now, whether that's post-economic from their portfolio, from their house, or maybe from technology, deflation is like, that's part of like, now they can do much more local because they have much more free time on their hands to work on local projects.
I do think that there have been, I know a lot of people in my generation who have been making the trade of time for money, meaning they would rather have the time than the money. I've talked to lots of folks in their late 40s who are kind of punching out of their career job, not because they banked 10 million and they're set, but because they banked $1 million and that's enough to buy them some runway for 5 years to go write a book or become a teacher or whatever it is they really wanted to do. So those kinds of mid-career, early career shifts, I think are all in favor of time, and that does benefit people in the local community, right? If people want to actually take their time and do something with it.
I have this weird image of you in this like post-apocalyptic hellscape in somewhere in rural America, where you're doing Civil War triage in like a barn, and you're writing zines eulogizing the lost.
I don't think it's going to get that bad.
I don't know, but I'd watch that Netflix series. I'm just saying.
All right. Well, on our 3 questions to the doom of humanity, I wanted to check in with y'all on AI. We haven't talked about AI in a while. Specifically, I wanted to talk about this one company called Cluey. And Cluey just raised $16 million backed by Andreessen Horowitz at $100+ million valuation. And the premise of this company is they're going to install local software like on your laptop, on your phone, maybe with a pin, who knows, and to cheat on everything in your life. That's literally the premise, is that why in the world wouldn't you have AI listening to every single thing that goes on in your life and giving you a second opinion, from whether you ask that girl out on a date or whether you make a restaurant reservation for the right restaurant or whether you just have it eavesdrop on all your conversations at the coffee shop so that it can tell you things to say to sound smarter. That's literally the premise of the business. Is this what causes the end of humanity?
Go ahead, Jason. Take the first swing at that.
I got distracted. I went from cheating to then and then when he went to the meeting, I was like, you got Cyrano de Bergerac like in your ear. This is amazing now. I totally turned a corner. I told it like
that all it took you 100. You saw the utility, and now you're all in. Where do I sign up? Get me in the A round.
Wait a second. Yeah. I like this idea.
Wait a second. I was like, who cares about cheating on school? But then I was like, wait a second.
I could cheat on life. Yeah, that's the pitch. That's the pitch. Nice. Cheat on life.
Well, I think that's part of the kind of the Bay Area ethos too, right? Is like they do truly want to like disrupt schooling or whatever. They think they can, or they don't think it's there. Like whether it's Teal fellowships, et cetera. So like kind of disrupt education and everything. But at the same time, like, and does this? They hopefully maybe an accelerationist of like disrupting education even faster, and maybe that's part of the general plan. But at the same time, I just wonder. God, I don't want to take it on a side tangent, but this is perfect, Dave, that you brought A16Z, because I was thinking about A16Z a lot over the weekend, because like they reinvested in Adam Newman, who's infamous for WeWork. Now he's got a new product called Flow, where he's going to disrupt residential rental apartments. And I was like, at first it made no sense to me why A16 would be in that, but then I realized A16Z is trying to raise some of the biggest funds out there, and what has a larger TAM than physical real estate. And so to your point, like what has a bigger TAM than cheating on life? Like that's just great. And having just that AI bot with us at
real estate, education, healthcare, those are your TAMs right. That if you can crack, you
right, just cheat on those.
So what I love about this too is that I saw this but didn't like process this, and you were just telling me, Dave, too, like you actually thought this was a spoof. You didn't even think this is real.
I only thought it was The Onion or McSweeney's. I did not think this could possibly be real. But I mean, of course it is, and it makes sense. But, we were talking earlier, Jason, and you were mentioning like having everybody's note takers on in meetings. and like
Yep.
how that sort of starts crossing some weird lines, because in some states you can record with one side, in California you can't. And you know, then there's the issue of like, if you're recording something and it's in a public space, is there an expectation of privacy? It all feels like very untested water in terms of like the actual lawsuits that will result from this. But the bigger question is really, as just human beings going through your day, we now have access for $20 a month to all sorts of different AI tools that we could be using. Other than cheating on everything in life, is there anything you're actually using it for?
I mean,
Matt, you want to go first on this?
I mean, I'm using it for all sorts of stuff, but it's mostly like I use it for writing, editing. We use it for lots of the production around these podcasts. This high production value is coming from our misuse of
transcripts
AI.
and editing and
Transcripts, editing. I love, and Dave, you and I have talked a lot about this, like with physical writing. I loathe just saying AI, write this thing for me if it's not just a summary that you're saying this is just a summary. But I love AI. I love my Claude line editing. I love going like, structurally, is this argument sound? How can I always ask, it's like, how can I improve, strengthen, or clarify this point that I'm making over the course of just maybe a sentence all the way out to like a full-on essay. So I love it for helping me test and collaborate with my own thinking.
Mm-hmm.
But I always want to start with humanity, go into that space, and then return to humanity with it. And that's even
That's
if
a
I'm
great way of
asking
putting it.
for a summary. But that's a personal, and I actually tried to write down my own personal AI ethics a couple of months ago just to think about this. But
Jason?
I wanted to book all my meetings. I wanted to take all this shit out of my life too.
Yeah, no, I do too.
But nobody can do it yet. Yeah.
Well, that's what I'm saying. It removes tasks, not jobs, so to speak. And God, there's so many things in there. One is, you know, as we've seen all these technologies come and go, like, or come with us to stay, is that it's interesting that, you know, at first you get that hype cycle and you're like, it's going to change everything, right? And then it goes through that trough and you're like, oh, it's not good for anything. And then people kind of disregard it or write it off. And then it always comes back and is amazing. So like, it's kind of, I think we're kind of a little bit in that cycle. But at the same time, it makes me think about the bifurcation of it. Is almost tying all of our conversation together here, and maybe finishing more on an optimistic note, is like you can use AI to like cheat at life, so to speak. So then you could do those more quotidian things with like your community, you know, and community building that way. And I think that's what kind of Matt was getting at, that excites me more than anything, is like, and that's why I said, and Dave, you nailed it when I was like, post-economic doesn't mean ultra wealthy. Post-economic means I don't have to quite as, you know, work as hard on a quote unquote work or job. So therefore I can do other things with my life. And that's why, like, we've seen it throughout our lifetimes, right? Like, I don't need an entire room for a library anymore. I don't need an entire room for my CD collection, my DVD collection, my VHS collection. Like, I am like super optimistic about how technology takes so many of those things off of our plates that we all don't need quite as much to survive as we do. And this is also why I think so much about energy, tying it all together, is like the energy inputs matter more than anything else in this scenario. As long as, like, you know, we can all eat and everything, or like I talked about, so I think it's less than 1.5% of us are farmers, less than 50 bips of us actually are in the military protecting that farmland. So it's like, if you think about that in that sense, we are all in this abstract technology kind of post-economic thing. And so, yeah, why wouldn't you? I love this phrase, using AI to cheat at life is like, yeah, what are you using to cheat at life? I mean, it's just like having a constant companion with you, or I think about it like the other day, my father-in-law is dealing with some health issues, and I was advising him, was like, every time you're in that office, just record a voice memo and we can throw in an LLM later, because like, you're so emotional in those scenarios, you're not going to remember anything. But like, the first question he asked was like, do you tell the doctor? I'm like, yeah, of course. And they're usually very happy because they understand the emotionality of those situations. But then you can go back, and if you throw in an LLM, you can just be asking it questions in any GPT you want. And so I think, like, is that cheating at life, or is that just getting way more efficient?
Well, I mean, these are always going to be the personal, you know, AI ethics issues, right? I mean, I run into this. I've got a bunch of projects where I'm very explicitly saying I do not want AI to be part of writing this or to be producing this, book projects and things like that. But you know what AI is great for? Taking 25 minutes of me rambling and turning it into a table. Like, that's an incredible, like, is that a cheat? Well, yeah, because I didn't have to transcribe my 25 minutes and then figure out how to get that into an organized table. I let the LLM figure it out for me. And like, that's a big difference than being at a cocktail party and having somebody whisper in your ear Sartre quotes so that you sound smart to the girl you're trying to impress. right? Which is literally the kind of scenario Cluey is trying to promote.
What if I'm trying to seduce Sartre? Where does it go? Where does it end? The problem with this too, the problem with this is I'm rewatching Battlestar Galactica, the rebooted series, and you get to the part of when there's 50,000, then 40,000, then less people left in the whole face of humanity, and you have to start talking about resource allocation because we only have so many Viper pilots, we only have so many farmers, we only have so many whatever Tillium miners or whatever the magic resource is on the show and stuff like that. And then you find out that you have to deal with the ugly human truths of how do you get other humans to trade time and agents for these tasks.
Right.
And then, of course, the AI supercomputer Cylons go through the same thing where they're like, what do you mean we just can't only allow sentience up to this level and then strip it out? And it's just, we're all destined to collapse on this hill. But I think it goes back to that point. You just have to start really small. You got to figure out what works for you and what works for your community. And I don't know, I hope California doesn't spin off into some weird anti-education, ear whispering tribe, but I don't know. See all the neuromancer stuff from 2 episodes.
Ear whispering tribe. I love it.
The ear whispering.
Ear whispering tribes.
Related though to your part of your question though, Dave, as I think about it, is like you're saying, like whether it's the new Meta glasses or allegedly OpenAI might come out with some sort of token that wearable, right? That's always recording, and then like it becomes a conversation starter of every meeting we have. Is like, is this being recorded or not? But I wonder too if people are already we're already there with all these IoT around us, right? Like everything's listening at all times. So like, are we kind of painting a dystopian that we're already living in?
Yeah, I mean, I think the expectation of privacy I gave up on a long time ago, personally, but that doesn't mean I still don't think it is a valuable human societal trait and one which should be protected, just because I've chosen to live a life where I just don't care about these things, right? But I think there's a bigger question about how that changes how we react to each other as humans. There's just whether something's being recorded absolutely changes how I am in a conversation. How could it not, right?
Privacy is a key, I think, and this is a non-clinical explanation. Let me be very, very clear to say, but privacy is a part of agency because that is part of establishing any boundary and expectation of boundary in any human relationship.
Well said.
And then
thank you to my shrink.
I'm sure you guys have thought about I'm sure you guys have thought about this too. Is like, as we got maybe close to a year ago now, it's like we went down this rabbit hole of kind of get ahead of all the AI stuff and maybe using it for LinkedIn content to put out more content and everything. And then I quickly kind of pulled the plug there because you could quickly see if everybody's doing this, it's just like we talk about this kingdom of slop. Is what do we do? What I'm excited for, or I'm trying to think about, is what does it look like in that world to show the authenticity in the real world, right? What is going to be the exciting things, right? In real life meetups, zines, what is the thing that's really going to show that we're do we really bifurcate, right? Of this ultra, bots in our ears and in our eyeglasses and everything else, and then bifurcating that with just I don't know, turning wood. I don't know. What do we do? That's how do you show that?
This is where I cut Dave off for a second to say thank you to the Yancey Strickler dialect doll podcast that you sent me, Jason, where after 2 hours of my life, I'm more committed than ever, and I'm online going, am I really going to spend $500 on a 1-inch button maker so I could do small run buttons? Because the Meta label thing, I'm texting you guys going, I'm going to start Meta lapel and just make one.
I have two. I already have a 1.5-inch button maker, so we're set.
Right, so if I buy the 1 and you have the 1.5, all right, now please answer, Dave.
We're set. We got a whole business. No, we're absolutely already seeing this push back towards more in-person stuff. And that was already happening post-COVID. I think AI is just accelerating that. In my local communities, I'm seeing it. I'm hearing it from everybody. I've had tons of people ping me about how to make zines. I get more traffic on my how to make zines videos than I do on the stuff that we post on Active Return sometimes. So there is definitely a movement towards that kind of re-engaging with humanity. And I think that feels pretty inevitable. But the AI slop in business, I think is really interesting. I'm going to go ahead and call out Altruist on this because I'm both with a big thumbs up and a thumbs down. Because I think they did two really interesting things with the rebrand they just did. A, it's just beautiful and their designers should be happy and 2 thumbs up on that front. they make a commitment in their big rebrand to say, we're never going to use stock photography anymore. Every person you see in a video or in a picture is either a client or an advisor for, somebody who works for Altruist, which I think is an amazing commitment to make. At the same time, they've completely landed on an illustration style that leans hard into AI slop garbage. It gets you little at stake animations and clearly lifted watercolor styles from a person who's never done watercolor before. And so it's antithetical to the very thing they're saying they're trying to do, which is to be more human by featuring humans in the photography, by how they've redesigned this brand. And then they're deliberately carving out this bit that says, but we're not going to spend $500 a quarter on hiring an artist to actually do the illustrations for our articles. That's where it starts getting weird to me, because not so much because that's a bad choice. I'm not trying to shame them, but if your positioning is going to be one thing, how are we going to know? How are we going to really be able to assess whether or not this is sort of a human to human firm and they're really leaning into that? Or, hey, we're using all the AI tools to maximize our efficiency in delivering something great to you, both of which are very legitimate business strategies. I don't think one is inherently better or morally superior, but knowing as a consumer, I think is going to be really important. Are you seeing examples of folks out there on either side where you feel like, I really understand what they're using AI for and I agree with it? Or conversely, people just pushing it away?
Well, I did see, I don't know if I sent you guys, Perplexity just added stock market data to their system. That was brilliant, I thought, too, for as far as being able to look up, 10Ks, et cetera. That was,
let's
really
say
cool.
finally, one of those things, they added it and I was like, this is amazing. And I've been enjoying it thoroughly. Yeah.
Yeah. So I mean, I'm trying to stretch the things I think are using it well. I think like Dave, you're saying, I think there's simple illustrations that may have taken way too long in the past that maybe were not to a caliber of requiring an artist. Whether it's just a chart table, a quick animation, maybe that's
totally using it for, again, I'm using it. All of my charts per data go into Data Wrapper. They're being run through a thing I built in Claude that's running all the data through it. Hand check everything to make sure that it's good, but I haven't done a hand chart in Excel since I discovered AI. So yeah, for sure, that's a completely viable use case. But where you draw that line is always going to be personal on the part of the producer. I see it in Substack blogs all the time, the number of Substack blogs that feature 7 Midjourney pictures that somebody's put together.
All of them.
It's and I get it when you're I really need an illustration of a dog playing golf.
But do you need the illustration? I'd be I'm automatically checking out of stuff that overuses that, because I want to see
exactly.
I want to see, this is my strategy. I'm using that horse shampoo. I'm letting the mullet grow for you, Buck. We're going at full human out of control on this one. I'm clogging all the drains in the house. I'm looking for ugly people. I'm looking for mustard stains on shirts. I'm looking for a lack of Midjourney skills. These are what I'm looking for in the world today.
Right.
I don't have time for
somebody who doesn't bathe.
No sexy sart over here.
Yeah. Matt, as you remind me of, I always think about, you always want ugly fruit and ugly people, right? You want things that that's where the quality is, so to speak. Little non-perfection. But I don't think it makes me think about I wonder now if we're just being golden agers, right? It was so much better in in analog times when we were kids. And I'm I don't think that either. I mean, I always loved what Monocle magazine did, and the editor Tyler Brule chose to use all analog photography, which then changed the quality of the paper they need to use to get those prints the way they wanted. All of that stuff matters. And I think you're right, Dave. It's how do you have one foot in the world and one in the other? It's either. You can't really do and, right? It's either or. And I think that's difficult because it's a very slippery slope, right? And where does it come back to? But semi-related, I think about it I used to always think about I think about energy inputs, but then I also think about meat, for example. I think that the cost of a grass-fed ruminant steak just keeps escalating too in the world we live in, right? You have these bifurcations, right? But it makes other things in life maybe get easier with technology, but so then if the in real life becomes more and more valuable, this is what, I don't know if it's a fear, but I just see that in real world events, the prices keep going up, and I actually think they're lagging. So for example, Matt knows, I look at sports teams that are for sale all the time, and the ability for the US Big Four to monetize their customers is it's a horrible thing to say, but they're very good at it. Whereas like an English soccer team is not very good at it, right? But like, how do we describe that value of in real life when it becomes the most valuable thing to us? And so I don't know how we charge, and right now, are we even in the golden age where we're charging way less than the value of these in real life events that are one-time events that you can't replicate with an AI, or Mid-Journey.
There's a weird, like, I need the medium size inside of this, and this is the part that I worry about and I try to look for in life, which is, Dave, you and I have talked about this a lot. It's like, I need that stuff that's still mid. We need stuff that is more mid, because between luxury and crap, that's the real part that gets hollowed out here. It becomes the only way I can go see a baseball game is if I'm willing to spend hundreds and hundreds of dollars and all the concession stands and the parking fees and all the other crap to do it, or else it's like, pick up a stick and an old tennis ball for my dog in the backyard. But and there's nothing in the middle.
We talked about this in sports. We talked about this in music, right? Like everything can't be a Taylor Swift or Beyonce tour. You need some mid-tier bands to be able to afford to tour as well. And people need to be able to go and see those concerts at a reasonable price that they can afford too. But I think we're seeing that. I mean, I don't know. I'm not a big sports guy, but I love minor league baseball. And like minor league baseball seems to be crushing it. I mean, the Hartford Yard Goats are half sold out for the season. I mean, like,
and that is a minor league team.
They're also called the Yard Goats, which is just, you got to shout out.
And they let the community name them, which after Bodie McBoatface, you thought no one would ever do.
But this is sort of my point is like, I think we're going to see more and more of that. I think that's part of things getting relocalized, right? Is people aren't going to spend $300 to drive an hour to Boston to go see a Red Sox game. They're going to spend $62 for the, behind the dugout seats at the Yard Goats.
Yeah, and I'm still going to be mad that my Phillies farm team isn't in Scranton Wilkes-Barre, and I don't want to see the damn Yankees play. But that's
what you get.
I'm still going to whine about it, Dave. Buck, you got anything for us? You want to derail us? Did you give us your topic du jour of chaos?
I kind of threw a couple of topics in there. I snuck them in there, but then one of the other ones was I had two just random ones. Like, did you guys see like Zuck coming after the OpenAI engineers and offering like $100 million signing bonuses? Like, are these the new athletes?
That's a great question. I mean, Dave, you presumably got one of these $100 million offers for your table.
Oh yeah,
that's why he's at a different location. Center. He's out there interviewing.
No, the irony is, look, if you were one of those guys, if you were one of the 400 to 500 senior AI developers in California, because that's what we're talking about, then by all means, you should make all the bank you can. And I think that they should all be treating that the same way. Some guy who got picked second for the draft should be like, maybe you're not the name above the title, but you're going to negotiate the crap out of that first deal because you could be injured on your first game and never play again. I feel like that's what that sort of talent hunt looks like. It's okay for the moment you have, you're the hottest ticket in town. I think it's pretty clear in 2 to 3 years, very few of those folks will still be the hottest names in town. Not because they're stupid, but because inevitably what happens is they'll get hired and put on a project. And now that's the only thing they're going to know for the next 2 years. Meanwhile, some kid who's 19 is leapfrogging them for what's valuable 5 years from now. It's like, I don't think we live in a world where those 400 or 500 people are the next scions of Silicon Valley. I think they should bank all of that and get a financial advisor very quickly.
It's like live golf. You better just take that shmoney while it's good, huh?
Take it and go, man.
It's on the table. And wouldn't that be the strategy from Zuck too? Like, this is just, I can pay for this right now, so I will. And if nothing else, this just helps box out competition. Like,
I think there's a lot of that. I think there's a lot of just keeping money off the table for other people or keeping talent off the table for other people. We saw that in electric vehicles, right? And all those teams, the autonomous vehicle teams getting poached back and forth between Google and Tesla and So I think we're just going to see that in AI too. Mostly it makes me think there's no fiscal discipline going on at Meta, which is probably an important thing to know about if you're a single stock picker. I'm not, but if I was making that evaluation, that seems like something to note.
I like the critique is Meta fiscal discipline on Meta.
But at the same time, okay.
I know 3 words that have never been said at the same time.
I know.
So what is it like? What did they pay for Johnny Ive at OpenAI, right? They paid like $6 billion.
Well, that deal got canceled. That's under some sort of review for a trademark dispute or something.
Yeah, is that
they
true?
got pulled.
Like, yeah,
I don't know.
Yeah,
I heard a rumor.
Yeah, that's what I was trying to figure out too. It looked like it got pulled, but is that for a trademark dispute, or are they still gonna acqui-hire them? But at the same time,
assume it's going forward. Yeah.
Okay, right. So to your point about fiscal discipline, right? Yeah, first you go, that's insane. Like you're just acqui-hiring, for $6 billion, but like at the same time, then you just do the percentages as we have to do in finance. It's like it's 2% of the value of the company. What's the probability they come with a product that raises the enterprise value more than 2%?
Pretty high with John Ivey, right?
Right.
That's the bet. That's the bet.
Yeah, because you have to look at this. You're buying human capital as opposed to financial capital in the terms of an asset. But that's the way that I look at this too. Is I am now capital allocating to control this asset, keep it away from competitors, and then can they move the needle on something that's already a massive entity, which is really easy to forget how big these companies are when we see these numbers tossed around.
Yeah, and I think also the pricing power in AI. I mean, the more time I spend with that AI, the more I understand why people are spending thousands of dollars a month.
Yeah, the more I'm scared that they're gonna, instead of MailChimp going like, "Oh, you're really annoying now," I can switch. It's like I am on the hook with Claude right now, and I am scared.
No,
relationship. The relationship that we have built. This is big problems.
Well, my biggest problem is that I've got a sort of personal relationship with OpenAI where I just sort of made the decision to leave all the memory stuff on, connect it to my Gmail, all that jazz, which has been interesting and mostly useful. And I'm shoveling money at them for that. And then Claude I'm using as sort of my coding and development partner. And that just can suck up an infinite amount of money. Like the amount of money you can throw at, boiling water out of swimming pools is just crazy.
Yeah, it's always interesting our bets, right? Like actually my bet's on like Google Gemini long term because like I think it becomes like the IBM or the Microsoft Office.
I see that,
right? Because they have the biggest war chest, so like that's kind of my bet on that. But like I also think on what would be hilarious to me in the Johnny Ive scenario though is that eventually Apple just buys OpenAI with all their cash, right? And now he's back working at Apple.
Which is divine justice in its own way.
Right. It really would be. It would be.
Right. More Silicon Valley capital allocation. All right. You got any more hand grenades for us, Buck?
No, I'm good.
You're good. We're full.
I'm all set.
All right. Back to real life. Buck, you doing anything lately? Is there anything me and you got an Eric Crittenden interview that I can't wait for people to see. I think that's coming out either right before or right after this one drops. Anything else you're up to these days?
No, like you said, that interview is great. Always happy to talk to Eric, and yeah, you know better when it's dropping. Also, I'll suggest for people. I can't believe I finally just ate the bullet and got like YouTube Premium. I cannot believe I.
Wait! You just did that? Why do you hate yourself?
Like,
why do you hate yourself?
What a life changer! I'm like sometimes I'm just so cheap for no reason, and man, that was a cheap for no reason.
Just to get rid of the ads
now, like
no, I'm not. I don't have YouTube Premium. For why?
Oh my God.
Okay, three things. One, get rid of the ads is massive. Like if that was that alone. Two, it automatically then has my other device. Like so if I go from my iPad to my phone, it'll pull it up on my phone right where I left off. Like that is amazing. And then three, this is gonna be total psycho mode, is you can listen at like 3x plus on premium that you can't do on regular.
This is why I did it. There's too much stuff that was starting to appear on
3x. That's the reason you did it, is because you want to be able to listen.
That's the game changer. It's like that was one of the ones I wasn't anticipating that I've been really
my brain doesn't work any faster than 2x.
You just got to keep training.
Yeah, I know.
The right
more.
I will say, especially for like music discovery, because I love the YouTube rabbit hole for discovery and just falling down what it's suggesting next and what shows up with things. That's a real guilty pleasure of mine. And I could not handle another song that got broken up halfway through by an ad.
Oh yeah. That is like, to me, that's the sin, is that, but I don't want that much on YouTube. So,
my habits shifted like 2 or 3 years ago. And that is one that never have I felt bad or better about a decision to move to paid on the platform than now. Welcome to the dark side, Jason, on that. Dave, maybe you'll join us. What about you? What do you got cooking, Dave?
Just writing more stuff at Nadig.com. I'm off to the Morningstar conference this week to complain about private equity and private credit some more.
You're sure they're going to listen to you,
for a while.
right? They'll listen, right?
I'm sure. I'll say it once, it'll be over.
Okay, that's
You mean
fantastic.
alternative investments, Dave? It's alternative.
Shadow banking.
sell them to
Let's call it shadow banking.
Yeah.
Get it over with.
Oh yeah, that'll receive even more fans. Good luck with that. Have fun. Well, the Dave Nadig website continues to ride high in my inbox, and I'm just throwing it out there. I just got this interview up with Keith Morris. We got hair care tips from the founder of Black Flag, and I could not be happier
Nice.
than introducing him to Ned Russin from Glitterer and Title Fight, who I also love, and any excuse I have to pump my local Wilkes-Barre music scene, I'm going to take it. So you're watching Clickbait. If you made it this far, I don't know. Clearly, you don't have ads on your YouTube. That's probably all about you. Absolute pleasure, guys. I'll see you real soon.
Cheers.
Thanks.
Thank you for listening. If you enjoyed this episode, please like and subscribe and tell a friend. Matt Zeigler is a managing director at Sunpoint Investments. Jason Buck is the chief investment officer at Mutiny Funds. Dave Nadig is an independent financial futurist and hopeful ETF expert. No information in this podcast should be construed as investment advice. Securities discussed in the podcast may be holdings of the hosts or their clients.